Good morning, everybody. It's Monday, August 12th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down a penny and a quarter at $3.93 3/4. November soybeans were down 5 1/4 at $9.97 1/4, and December Chicago wheat was down 8 at $5.57 3/4. This morning, we had a couple of export sales announcements out. 165,000 corn to unknown for 24, and 300,000 soybeans to unknown, 100,000 for 23, and the balance of 200,000 for 24. Good morning, guys. Hope everybody had a great weekend. We're going to start the show off this morning. We just had a couple of questions come in here early this morning. Obviously, today we've got a big USDA report at 11 o'clock Central. So, guys, I'll pose the first question. What number here are we looking for on the report that could potentially flip the narrative? And I'll throw it to Dustin to kick us off, and then we can move it around the room.
Yeah, thanks, Dan. I think, obviously everyone's going to be looking at yield and acres for this report. So just starting with the baseline expectation, we had a, if we're looking at 181 originally, I think the average guess is 182.1. And they have harvested acres down about 450,000 for corn on average guess, based on USDA mentioning that they're going to take into account acreage in August, right? Which was like, something that kind of jolted the market last time around, I think, to be a little bit friendly, the expectation that we're going to see some acre reduction. So I would say off the cuff, a number that'd be bullish would be something closer to 180 and up to 1 million acres of corn lost. But how bullish is the question, really, because we've had really good weather so far. This is still USDA's opinion of yield. I think the market might just need a little bit of a reminder that things can tighten up pretty quickly. We've had years where the narrative has completely changed, like 2020, where we all of a sudden found ourselves trading from lower threes into mid sevens within a 6-month window. A lot of things had to fall in line. The stars had to align for that to happen. But it is a reminder of 40, 50 cents or more, could still happen if we end up at the very low end of all of these estimates. I think the low estimate was 180.1. And we have to remember 180 is still three bushels above the prior all-time record. So it's not out of the realm of what would be too surprising at the end, in my opinion.
How about soybeans?
Yeah, for soybeans, I mean, there's a lot more leeway on the balance sheet where they could start cutting demand. I mean, we haven't seen the demand show up yet. So, I would say something closer to the 50 mark would have to be where it would be extremely bullish. I think the low guess is 51.5. Their average acreage estimate is only down by 150,000 in the estimates. So, that's a little bit tougher because even at a 51, you can make the balance sheet pencil pretty easily just by reducing some of the excess demand they've been putting in there.
Very good. Justin?
The only comment I'd make there is, we talked about this, I think, Thursday or Friday last week about 2003, and that was an extreme year where we just had such a bad finish to the soybean crop. But I remember that year we had Pro Farmer do their tour and estimated a record bean yield, and it ended up being a disaster. So, just to remember what can happen, if you don't finish good in August and September for beans. So I think this report's not going to do anything for beans. To Dustin's point, it's got such a big buffer on demand, and they're just going to write down a big bean yield because it's just the date. Corn, I think corn can get interesting quicker. Problem is the weather's been too good. Everyone's so bearish, right? So we talked about this before the show. You're competitive. I mean, we're competitive on global prices for corn and beans, and we're starting to get some, sales trickle in here. The problem is when the market's really bearish or really bullish, everyone's on the same page. So if you're an end user, you're hand to mouth, right? Because you're like, the farmer's got to sell. There's plenty of bushels. Like, why be in a hurry to price anything? The opposite in bullish years, like when the narrative change, it can change quick because now you're like, I got to get coverage. I got to buy 6 months of coverage. So until you can flip a narrative where the majority of participants are bullish or bearish, it's really hard to turn. And I think that's a situation we're in where, the farmers undersold, they're bearish, the funds are short, end users are, probably hand to mouth right now. So you kind of got everybody on the same page. What can switch something is when, right, you throw a wrench in that whole thing and everybody's got to, kind of refigure their game plan. Right now, everyone's on the same game plan.
That's a good point. And Justin, I think we've been talking quite a bit about the, obviously the fund short, and, they covered, I mean, I'm speaking specifically for corn, but you look at Commitment to Traders and they covered 52,000 contracts of corn last week, but yet the producer merchant processor category put 39,000 short positions. So I think we did. I mean, it just justification for what you saw for farmer selling and dumping grain, right?
Yeah, it's actually really scary because it's like what makes sense. Like if you were managing the fund short, you would be like, I'm going to be short until the farmer has to sell at harvest, and I'm going to start covering my short. I mean, it's unfortunate that we don't have it daily because we had that Monday equity meltdown. And I think there was some short covering because of that, just the way that people are positioned. It seems like kind of short commodities or specifically grains and long equities. So we had that massive meltdown last Monday. I would bet a lot of that short covering was tied to that whole, whether it was the, carry trade with the Japanese yen or, who knows what the cause was. But yeah, I think it shows, Ben and I talked about this Friday. I mean, to be able to cover 50,000 corn and make new contract lows, I think tells you the situation that we're in with the farmer long going into harvest. I think this old crop corn hangover, I think that's probably more important than the report, is getting past that first notice day. As opposed, as looking for something to turn the market. It's just kind of getting that last bad long out of the market.
Sure. Ben, what's on your mind here this morning?
Yeah, I think it's a big anomaly of things that you typically see when you have a large short position, and they're able and willing to cover it in a declining market. We typically think of managed money as being trend following, being momentum traders, and they're willing to start reducing positions, and they're doing it. They're doing a pretty fantastic job at it, if you ask me. I think there's going to have to be a number of things that will fall in place to warrant anything more than a 30 or 40 cent rally at this time of the year. Certainly those things could come into play. We still have a lot of grain that's going to hit the market. We have a lot of space that is full right now from a big wheat crop and the remnants of the 23 crop. So I think the basis is not going to be better. I think that, yes, we can rally, but I don't think it's going to be to the levels that people would like to see at this point. And the longer we stay down here, the more business we do, maybe the greater potential that we have following the beginning of harvest and through harvest to put something together. So a lot of things can be changed today on the report as well. Concerns about how the safrinha crop finished. People feel like there needs to be some markdowns there. Some people feel that there needs to be some markdowns on Ukrainian crop. There's certainly been some issues with French wheat. So there's a lot of little data points that have to fall in line or could fall in line that could be supportive. But reports a lot of humility, right? You never know what they're going to do. I would be shocked if we saw a sub 181 yield. But you never know.
That's why we'll tune in.
Yeah, at this stage, I mean, you're probably better off going cheaper than higher.
Yep.
If you want a bull market, go to 350.
Yep.
Go to some price that we overshoot it on the expectations of yield. We start convincing everybody it's a 185 or some gigantic number, and get some panic selling. I mean, that's probably the best chance of making a bottom, in my opinion.
Well, and we have the opportunity there as well with people that have beefier crop insurance policies to manage that and a 350 market and set up for some sort of a snapback. I think that would be a really optimal sort of trade if handled correctly. So,
Yep.
Oh, very good, guys. Anything last minute thoughts or comments here going into the report as we wrap up the grain side?
One last point I would make is the carry-in number. It didn't really make sense why they lowered carry-in on that July WASDE after seeing those June stocks numbers. I'm talking corn specifically. So if there is going to be a mistake there, they're going to have to make that revision probably after the September stocks number comes out. So just watching carry in to see if they've made any adjustments to that number, because it was such a surprise in the July WASDE. So,
yeah, really the only thing that would make sense there is that, they were wrong on last year's crop size, because nothing else really makes sense, how they played it. And they've, instead of just, changing how they do these reports and just, being able to adjust yield after a certain time, like after January, they just mess with these numbers, and it really kind of screws with you on demand and all those things. But
yeah, like specifically thinking, we've seen them adjust WASDE, we've seen them adjust stocks later because it wasn't driving with their WASDE estimate, which was really crazy thing to think about, but that was the answer that we got in the Q&A in the Jan 2021 stocks number. Right, they had actually went back and they adjusted the September 2020 ending stocks in the Jan 2021 stocks release because the stocks were not matching up to their feed demand estimate, which is something that blew us away at the time, right? Yeah. But like that is a possibility that like WASDE numbers trump stock numbers to some small degree. I mean, we've seen them make a 100 million bushel revision before, but anything beyond that, it's probably not likely.
Yeah.
Oh, very good. A couple minutes before we come into the open here, Ryland, funds were big sellers of live cattle last week, 22,000 contracts. Slaughter was down about 4.4% on the beef side. Hogs down 3.4% on the slaughter. So what do you got for us to start the week?
Yeah, I think that was kind of the confirmation that everybody needed to see, is that funds were pretty active in terms of liquidating, but open interest was down big on this break. So it seemed like there was a lot more going on than just simply fund selling. I think we got some producer panic. It just kind of felt like, the overall down in commitment, maybe, the fund short, or maybe a little bit bigger than what we're seeing when all's said and done. So I think all eyes are on cash this week. We saw cash coming down about 1 to 2 lower in the south and about 3 to 5 lower in the north. So, I mean, at this point, it feels like where the board's sitting right now could be right if we don't really see packers really start to ramp it up or beef prices stabilize before Labor Day. So I think right now it's just kind of a wait and see mentality. I think you're going to get a couple guys with a little bit more confidence trying to step in here from a buying standpoint, but obviously cash and beef have been really weak and during this time frame and could still get a lot weaker before we really start to see that Labor Day demand kind of ramp up. And then after that, the question mark is, what's going to hold us up, at this point outside of the kind of tight supply narrative. So we'll see. We've taken a lot of big premiums out of the back end of the market. Maybe we can reestablish some of those, but I think right now most of the producers are going to be looking to be pretty active sellers on a rally. So just kind of watching to see if we can get any good at cash indications kind of early in the week. But overall, it's been kind of a bloodbath, and maybe got a little bit of hope on Friday that we could see things bounce. And on the hog side of things, market had been on a nice rally. It's been kind of slowly grinding lower. We've seen cutouts start to drift lower. We're seeing cash lower as well. So overall, the fundamental side of the market has been kind of weak. On the other hand, we got a nice little premium here. So on the futures, and we did see funds net selling about 10. They bought about 4,000 contracts as of last Tuesday. So they're still on the long side of the market. It seemed like they're going to be the ones on defense right now, but maybe they know something we don't. But it just kind of seems like we're into that time frame where post Labor Day we usually get that little bit of a rally and the party's kind of over. So I think just kind of good to stay hedged at this point in the year.
Very good. We appreciate the outlook, and we'll be back with more tomorrow, obviously. Just came into the open here. December corn down 2.5 now, 392.25 is the last. November soybeans are down 9.5 at 993.75. And December Chicago wheat is down 9.75 at 556.25. One thing to point out, as I mentioned earlier, we will be back at 11:15 Central Time here this morning. We'll have post report comments, talk about what the markets are doing. So be sure to tune in 11:15 Central Time. And if you like the show as much as we do, we appreciate everybody tuning in on a daily basis. We have a lot of fun putting this on every day. Give us a like and subscribe. Doesn't cost you anything. Certainly helps us out. And we get you access to premium content and keeps you posted, updated on everything that we're posting relative to AgYield. So throw us a like and subscribe if you would. We appreciate that. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good conversation. We'll be back at 11:15 Central, and we'll talk to you then. Thanks a lot.
Thank you.